Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the forecast for the coming week, and we are starting off from the dollar index, and this is the weekly time frame. So what we can see in the dollar index here in the weekly time frame is the fact that we just have this choppy price delivery, or we can just possibly just say we have a consolidated price delivery here, because we are failing to see bearish impulse to the downside or a bullish impulse to the upside. What we can clearly see is the fact that this price here traded back into this inversion fair value gap from the monthly time frame, even though price did not mitigate the consequent encroachment of that monthly inversion fair value gap. So we can see we had a bearish rejection to the downside after price took out this buy side liquidity. If you guys can vividly remember, we made reference to the equal highs we had here, full of buy side liquidity. And we can clearly see the month of August was trading within this candle range, the high and the low. And we're seeing now that price is really failing to go bullish. And also price is giving us bearish possibilities looking at this weekly candle rejections. And I've been making reference to the fact that we have a daily bullish order block that we're looking forward to see that price strongly violate that. Then we would now build up a strong reason to be bearish to the downside. We're going to look at the daily time frame and we're going to clearly see that. So we had this liquidity gap when we had this engulfing candle, bullish engulfing. I told us to trade bullish, the consequent encroachment of this bearish order block, and then we are to expect a pullback, and we can see that pullback happen back into the void and then the bullishness. So now we can see bearish rejection. So clearly what we can see from the weekly time frame in the dollar index is that we are having the possibility of bearishness to the downside. Looking at the fact that we're seeing this candle is giving us bearish rejection to the downside, respecting the volume of this bullish candle that took out this buy side liquidity and gave the bearish rejection to the downside. But then let's look at the daily time frame to look at how we are to anticipate the possibility of that bearish movement, or we could see also how we could frame bullishness from the daily time frame. So here in the daily time frame, you can clearly see the fact that, we pointed out that price reacted from a weekly bullish fair value gap, and then we had the bullish movement of price to the upside. Price returned to mitigate that void, and you can see here in confluence is this bullish order block, and then we had this bullish impulse taking out the pool of buy side liquidity resting here. So now we can see how price returned to the downside, and you can see the choppy price delivery that I told us about previous weeks when we were having the forecast, and how I made emphasis to this daily bullish order block. We are only strongly bearish if price should take out this. Yes, we know the buyers in the dollar index looking at the most recent price delivery is bearish, but for us then to frame that this is going to continue bearish to the downside after the mitigation of the weekly bullish fair value gap, then is for us to see price violate this daily bullish order block. And what we can just see is price build stack of sell side liquidity here, and now price have traded to the daily bullish order block. So we can see that price did not violate that immediately. Price mitigated that, respected that, and gave bullish movement of price to the upside. So what we can see now is here we have the buy candle before the sell movement to the downside that took out all of the sell side liquidity, mitigating the daily bullish order block. Now a pullback to the upside, and now we can see price reacted from there and then gave bearishness to the downside. So if we're going to see continuous bearishness, then there is no need for price to violate this sponsorship block that price have mitigated. So it means if we are going to be bearish, then we may see price just gives a reaction to the upside, and then we have the bearish continuation to the downside. And what we're looking forward to see is how price takes out this daily bullish order block, and then we may anticipate to see price gives us a pullback and then the bearish continuation to the downside. Looking at the fact that now price is trading to the downside, now back into this daily bullish order block that gave us this impulsive movement that took out this high points. So looking at the reaction here, if we are going to continue bearish, then we'll be looking forward to see how in lower time frame, when we look forward to a zone where we shall be anticipating a pullback for a bearish continuation to the downside. So if we are bullish, then you want to see then how price would continue bullish to the upside, and then we'll be looking forward to see price violate this block, and then we may have a bullish reason to the upside into this bearish order block we have here, because now we're seeing that price reacted from this daily bullish order block. But looking from the weekly time frame, we are having more of a bearish narrative to the downside. So this is what I have to show us in the daily time frame in the dollar index. Let's check the 4-hour time frame. So here in the 4-hour time frame, the daily bullish order block zone, so we can see price mitigated that and gave bullish reason to the upside, mitigating the bearish block we identified from the daily time frame, and now this bearish impulse to the downside. So after we had the bearish impulse to the downside, looking at it from the 4-hour time frame, we can see price traded back into this fair value gap and then bearish rejection to the downside. So you can see we have this engulfing candle. So we may just see price just gives a reaction, and then we may have a rejection to continue bearish to the downside. So if we are bearish, first we'll be trading to see price takes out this sell side liquidity from the 4-hour, with a possibility that then we may have bearish continuation to the downside. So for us to be bullish in the dollar index, so we would want to see, looking at what we are seeing from the 4-hour time frame, that then we have volume strongly trade to the upside, and want to see then volume closed above this engulfing candle, and then we'll trade bullish to this rejection block level. Looking at how price reacts, we may have a reaction that would give us a reason to go bearish, or price may give a pullback and then continue bullish to the upside. So I'm giving you guys the possibilities, just looking at what we are seeing in the market. It's not really clear, establishing just a strong direction for us to anticipate a movement. Let's check the 1-hour time frame. In the 1-hour time frame, what we can clearly see is, looking at the fact that we're having price trading to the downside back into the daily bullish order block, and from the weekly time frame, we're seeing more of a bearish reason than bullish reason. So what we can now see is, if price is going to continue bearish, looking at the 1-hour time frame, then price should not violate this bearish order block. We can look at the fact that price returned to the 4-hour fair value gap. Here in 1-hour time frame, what you're going to see is we have this breakout block here, because we had a sell movement before, a bullish movement that took out this buy side liquidity, for the sponsored movement to take out this buy side liquidity. So price return mitigated that. You can see rejection to the downside. Volume is failing to trade higher, and now we have this bearishness to the downside that took out this low point. So if we are bearish, price should not violate this bearish order block. We want to see a sell model within this bearish order block for us to continue bearish to the downside. So when we are bearish, we want to trade bearish to see price takes out the sell side here. We have the sell side into this bullish order block, and in extension, then look at the reaction that may give us a pullback to continue bearish to the downside. So this is what I have to show us in the dollar index. But then if price trades and violates this bearish order block, then we should anticipate the possibility that we would have bullish reason to the upside. So this is all I have to show us in dollar index. Let's check out the EURUSD pair, guys. Here in EURUSD, from the narrative we're seeing here on the charts in the weekly time frame, what we're seeing is that possibility of bullishness to the upside. When you compare that to also the narrative we saw in the dollar index, in the dollar index, we had those weekly candles giving us a bearish rejection to the downside. Here in EURUSD, we can see we're having bullish rejection to the upside. So we saw how price returned to the downside, mitigated this key level. Price took out this high point, so price went to the downside, taking out sell side liquidity, mitigated this key level, and then we had a bullish rejection to the upside. August 2 was just trading within this candle range, the high and the low. So what we can now see is the fact that this candle traded to the downside, taking out sell side liquidity. So bearish reason was failing to continue bearish to the downside to take out this key level. So we're just seeing bullish rejection to the upside. So after here, price took out this sell side liquidity, we had price traded to the upside, taking out this buy side liquidity of this candle range within which this weekly candles traded inside. So we can now see the next drawn liquidity that we have is this high, and in extension this high, we have a fair value gap resting here. So what we can see, if we're going to have bullish continuation in EURUSD, when a bearish reason is established in dollar index when the market opens next week, then we don't want to see price trades below the volume of this bearish colored candle. So want to see price trading above that to aim for this buy side liquidity, and the next buy side liquidity is this buy side liquidity. So this is the narrative from the weekly time frame. Let's check the daily time frame to look at zones and possible levels that price may react from as a restriction to price movements, and the levels price will react to give us a reason for price to trade in an intended direction. So what we can see from the daily time frame is we have this fair value gap here not filled. Price gave us a rally, a base level, a rally. Price returned to that, mitigated that, taking out sell side liquidity, and then we had bullish reason to the upside. So you can see we had a choppy delivery here, or let's say a range bound delivery here, just the way also you would see in the dollar index we had a range bound delivery also. So we can see price traded to the downside here, volume failing to trade lower, respecting this candle that took out sell side liquidity. And then we had bullish reason out of the range bound movements. Price traded into this daily rejection block and gave us a bearish reason to the downside to this bullish order block. And now we can see bullish rejection to the upside. So for us to have bullish continuation, then we really do not want to see that the market will violate this block here, this rejection block. So want to see price trading higher. Even if we're going to have a pullback, then the pullback should not violate the volume here of this rejection block. Basically, what I mean is we may see price trade to the downside here, and then want to see price gives us a reason to just go bullish, take out this buy side liquidity, and we have first this buy side liquidity. So this is my narrative for a bullish reason in the Euro USD. If price trades violating this rejection block, then we will see bearish reason, and clearly if we're going to have bearish reason, then we have a fair value gap resting here. So this is the narrative I can show you guys from the daily time frame. Let's check the 4-hour time frame in the Euro USD pair. So here in the 4-hour time frame, what we can clearly see is price traded to the daily bullish order block, gave a sharp bullish reaction to the upside during the New York session. That should be on Thursday. Yeah, we had a sharp reaction to the upside. So, you know, I had a sell reason from this candle week. So we can see price gave that sell reason. But anyway, the sell reason did not trade more lower to the downside, because first the sell reason was in anticipation of this movement. So price did not really return to that level before the sell happened. Now it came to that level and then gave a short-term sell movement to the downside. So the forecast to that is actually in the YouTube channel. So what we can now see is the reaction of price from the daily zone, bullish reason to the upside. So what we can see is that price is giving a bullish reason to the upside even in the range bound movement. So we can see the breakout bullish to the upside. So, you know, the draw on liquidity we identified from the weekly, and then the second next draw on liquidity. So looking at the fact that now price is reacting at this candle week, and then we had the sell reason, and now price traded back into this fair value gap in confluence to a breakout block here, because we had a buy movement before a sell movement that's called the sell side liquidity. Price mitigated that bullish reason to the upside. But what we can see is that volume here is failing to trade above this volume here. So what we want to see is when the market open, if we have volume trade above this, then we should expect to see the price will give us a pullback and first want to trade into this rejection level. In extension, we have the buy side liquidity resting here, and furthermore the next buy side liquidity. So this is for our bullish reason. So for the bearish reason, if price trades lower, possibly not violating the volume of this impulsive movement, because we can see it's facing rejection, your volume is still trading below that. So if price decides to go bearish to the downside, and then we see price violate this candle here, and we see that price violates this, then giving us a change in state of delivery, then we may start to frame a reason to want to go bearish, most especially if price takes out this rejection block level. So I am more bullish in the Euro USD than the bearish narrative, because what we can see is the fact that the supply zone from the weekly time frame has been retested multiple times, because all of this are within a weekly supply zone. So price has retested this multiple times. So price may violate it. So that is all I can say. That is all I can basically use my gut feelings to tell you guys. Let's check the 1 hour time frame. So in the 1 hour time frame, for us to be bullish, So, we marked the bullish breaker from the 4-hour time frame, which we can also refine here to this in the 1-hour time frame, because here we had the buy movement before the sell movement that took out this liquidity, bullish reason to the upside, price broke above this high, price returned to the breaker in confluence of a value gap here, giving us bullish reaction to the upside. And what we can see is volume closed above this internal structural pullback here, the swing high points, price created a bullish order block, bullish reason that took out this. So if we're going to see that bullish continuation, then price should not violate this bullish order block in the 1 hour, should give us a buy model to continue bullish to the upside in the Euro USD. The violation of this block would mean then we'll start framing a reason to go bearish to the downside if this doesn't hold price. So this is all I have to show us in Euro USD. Let's check out the GBP USD pair, guys. Here in GBP USD, in the weekly time frame, what we can clearly see is, I pointed out towards last 2 weeks because last week there wasn't a weekly focus. The fact that we want to see that price respect this bullish block in the weekly time frame, even though we anticipated to see bearishness to the downside. So in comparison and confluence to lower time frame zone, the daily, the 4-hour. So wanted to see a reason to trade bearish to the downside for the bullish expectation. And clearly what we can see is I pointed the fact that we had this bullish candle that traded to the fair value gap and give the bearish reason. Price traded above that, closing above that. Basically, that is a change in state of delivery. So we're expecting to see price holds at this bullish block and then gives us bullish reason to the upside. So from the narrative we're clearly seeing here, after price traded into the bullish block, even to the mean threshold, the consequent encroachment, we had the bullish rejection to the upside. Last week gave us bullish reason to the upside. We don't really have a valid bearish block to anticipate that from this delivery, we're just going to see bearish reason. So what we are just clearly seeing is the fact that we should anticipate another bullish reason to the upside. We have buy side liquidity resting here as the next draw on liquidity. So clearly this is what we are seeing from the weekly time frame in the GBP USD pair. Let's check the daily time frame. What we can clearly see in the daily time frame, if you guys can remember, I think last week there was case study I conducted in GBP USD in respect to last 2 weeks focus on how we wanted to see how price was going to trade into discount level, and that was this fair value gap, and then give us the bullish reason to the upside. So what we can see is the fact that price has retested this supply zone multiple times. In respect also to this candle week, price has retested that multiple times. Price came the first time, retested, fell again, price again returning to that after this first mitigation of this week. So what we can now see is that we have the possibility that this may not really hold again. This supply zone, price may break above that. So looking at now, price traded to the discount PDRA, mitigated the fair value gap, price swept sell side liquidity, and now bullish reason to the upside. What we can clearly see is that price is trading above this bearish order block here in the daily time frame. So we may have the reason that price would keep trading above that and then continue bullish to the upside. So let's make that out. So we may have that possibility that price may keep trading above that and gives us bullish continuation to the upside. So for the bullish reason then, we're looking forward to see the possibility that we may have a pullback to the downside from the daily time frame. What we're going to see is price may give us a pullback, possibly dip more lower to the main threshold of this, and then we have bullish continuation to the upside. So if this doesn't hold price to give us a reason to continue bullish to the upside, then the bearish reason is price may trade lower, aiming for the sell side into this fair value gap. But I am more bullish also in the GBP USD. I'm looking at a bullish reason than a bearish reason. The only bearish fact will be if price trades lower and then we see volume strongly trade below the volume of this bullish impulse, violating the rejection level here. Then we'll be looking forward to see price may trade into this fair value gap, resting below this particular movement of price. Let's check the 4-hour time frame to look at that more clearly. So here in the 4-hour time frame, the level we marked from the daily, the bearish order block that was violated, So what we can see here in the 4-hour time frame, we made reference to that level, how price have retested that multiple times. So what we can see is when price traded to the upside again, back into this rejection candle, price traded back to the downside, and what we can see is that price traded to this bullish order block zone and now give us a bullish reason to the upside. So what we are going to look forward to is this. So in respect to the level mark from the daily, it means if we have a pullback and price is going to hold and give us a bullish continuation, then want to see how price react from this level and gives us a buy model to continue bullish to the upside. If this doesn't hold, then we'll be looking forward to if this is going to possibly be bearish. So I'm giving you guys two narratives to look at. Then we want to see price possibly trades to the downside, violating this level. Price trades then, and if price strongly takes out this rejection block level, then we know we are bearish to the downside in GBPUSD. But looking at what I'm seeing here, I'm more bullish than expecting the bearish narrative. Price return to this bullish order block, and now bullish reason to the upside. So let's look at that from the 1-hour time frame. In the 1-hour time frame, what we can see is that we have here as a breaker level. Let's make that a breaker level, because what we can see is we have the buy movement here before the sell movement that took out this sell side liquidity, bullish impulse to the upside, taking out this high point. Price has pulled back to the downside, and now we're having this rejection bullish. Price swept sell side liquidity, bullish reason to the upside, and what we can see, price created this bullish block. So if we're going to have that bullish reason, then price in lower time frame, like the 15-minute time frame, you may see how price would drop to the downside here and create a buy model, and then we have the bullish continuation to the upside. So for the bearish reason, price should violate this given a change in state of delivery. So we may see price does this, then we can continue bearish to the downside, aim for the sell side, back to this rejection block level. And then this may help us understand if we're going to see bearish continuation, or then price may react from here to give a bullish reason. So this is what I'm going to show us, guys, my expectation in GBP USD. I'm giving us the two possible scenarios or conditions that may happen in the market in respect to the sponsorship block zones we've identified in the various pairs down to their 1-hour time frames. So let's check out the gold pair, guys. This is gold, and we know gold has been bullish, creating new all-time high. Gold created this new all-time high and then went into range-bound market movement before we had a bullish impulse that broke out and then creating a new all-time high. So from the weekly time frame, clearly we have price took out this level here. So basically, if we're expecting bullish continuation from the weekly time frame, is that you're expecting a pullback to this level before you have a bullish reason to the upside. Clearly, this is more of a mitigation block. So what you can see is that price doesn't necessarily have to pull back to this level before we have the bullish continuation. We're seeing strong bullish momentum to the upside. So price can just continue bullish, or price may return to take out the sell side to just mitigate a portion of this weekly bullish fair value gap, and then we have the bullish continuation to the upside. Let's look at that in the daily time frame. In the daily time frame, what we can clearly see is this is that weekly level we identify. You can see we have this range bound market movement and then the breakout. So when price sold within this daily candle, you can see that price did not sell to that weekly level. Price just sold to this daily bullish fair value gap and then bullish continuation. So now we can also see here that when price took out this buy side liquidity, given a bearish rejection, price only traded back bearish into this bullish fair value gap, taking out the sell side liquidity and then rejection to the upside. So we can see that we are bullish in the gold pair. But then if we're expecting to see that possibly price will give us a sell reason to the downside, because this now seeked the buy side liquidity, volume failed to close above that, then we may see the bearish reason for price to take out the sell side liquidity to possibly fully mitigate this fair value gap, and then we have the bullish continuation. So you can see here is where we have the daily level. So it means if the sell move is going to be sustainable, then it means you're trading to the daily level, not necessarily to the weekly level, because from this daily block, we could just see price continues bullish to the upside. Or now the next stuff which I said is price may trade lower to take out this previous daily candle low point, the sell side liquidity, to fully mitigate this fair value gap, and then we have the bullish reason to continue to the upside. So this is what I have to show us from the daily time frame. So let's check that from the 4-hour time frame. Here in the 4-hour time frame, clearly I actually had a sell reason to the downside here, because I saw how price gave this bullish impulse. So I saw the bearish and go into the downside here, and we had a change in state of delivery here. So I expected to see price trade bearish, and I was expecting to see price dipped in towards a discount before we have the bullish reason. So basically, I just made use of the sell movement before the bullish reason using the Fib tool. I used this low here this week and then to the high point. So I expected to see price trade to a discount, and clearly I was targeting this fair value gap before we have a bullish reason. But anyway, price traded into this key level here, what basically Mansouri Sapari will call the hidden OB, basically the double marabuzu. And then we had the bullish reaction to the upside. But what we can see is that price still returned back to my entry level and now given this bearish reaction. So we're not really bearish in the gold pair, but then we have to be open-minded. So if you're going to trade bearishness, clearly you'll be trading bearish to this sell movement here. It is if price violates this sell movement, then we may expect to see that price may fall to the downside, and you'll be targeting to see price comes into the sell movement before this bullish movement, taking out this sell side liquidity. So you keep an eye here to see if price is going to violate this. Then that is when you can decide to want to be really looking at the possibility of bearishness to the downside. So let's check that in the 1-hour time frame. Let's look at the 1-hour time frame. So here in the 1-hour time frame, so you can see within the 4-hour sponsorship block where we had a sell movement before bullishness, you can see that here in the 1-hour time frame we have this bullish order block here. So clearly, if you're bearish, I would recommend that you trade bearish just to this level, because if price trades lower here, we could see price gives us a buy model to continue bullish to the upside. But then if price violates that, we have bearishness to the downside. That is if you get to catch a bearish reason in a lower time frame, possibly into this fair value gap. You frame a bearish reason, so you want to trade bearish to this level, trading your stop loss. And if price violates that, then you know possibly you'll be aiming to see reaction at how price would trade to this. And then if price trades to this level, violating that, then you know you'll be going down to this institutional order flow. But then keep an eye here, we may have bullish reaction at that level, since we can see that the gold pair is bullish. So the violation of this can now give you a reason to anticipate that you want to go bearish. So this is all I have to show us in the gold pair, and this is all for the weekly forex forecast. So the next video come your way. Cheers and God bless you all.